Good morning, everybody. I am Christopher Frankland, founder of InsurTech 360 and head of InsurTech partnerships for Resource Pro. I am absolutely delighted to welcome you all to this morning's webinar, where we will be discussing how innovative technology can be integrated into your company DNA to create a fast, agile, and self-service driven insurance experience. So before we dive into today's session, I did want to remind everybody listening that today's webinar is actually the first in a series of innovation-focused webinars in the build-up to the Insurance Nexus, Insurance AI, and Innovative Tech USA events coming up next year on May the 12th and the 13th. There's already a terrific list of speakers in place, and it's shaping up to be an absolutely fantastic event. So I did just want to remind everybody that that's on the radar for 2020, and I believe a brochure is going to be going out next week for that. So please do keep a lookout on the Insurance Nexus website for that one. Back to today's topic. So as we move kind of towards the end of 2019, I think everybody would agree that really 2020 is shaping up to be a really pivotal year for insurance and technology. Technology that has really initially been adopted on a large scale by insurtechs to create a transformative customer experience is now much more kind of available and being looked at by incumbents within the industry. RPA, intelligent automation, chatbots, advanced analytics, really all innovative technology that collectively has the ability and potential to really open up a new era of innovative thinking across the insurance value chain. So typically taking a fragmented customer experience and using this technology to turn it into a smart data-driven experience that really puts the customer at the forefront of the customer journey. How do companies make this happen, right? So, with opportunity comes complexity. And I do think that one of the biggest challenges companies will face next year is really knowing how, when, and where to integrate innovative tech within their existing ecosystem and make it part of their DNA. Luckily, we have three fantastic people joining me this morning who are going to be talking about their own experience in this space and sharing some kind of examples and use cases of where they are using some of this technology to make digital part of their DNA. So in order of presenters, we have Justin Gress, Director of Strategic Operations at AXA, Richard McCathron, the Chief Insurance Officer for Hippo, and last but not least, Anthony Mitchell, Director of Digital Agency Consulting at State Auto Insurance. So Justin, I would love to hand over to you now to kind of give you the opportunity to talk about some of the things that you are working on and perhaps that AXA are putting into place at your end of the spectrum.
Great, thanks, Chris, very much, and appreciate you moderating the panel and Insurance Nexus sponsoring this event. To give you a little bit of background, give everyone a little bit of background. First on myself, I'm Director of Strategic Operations for AXA XL's North America insurance business. It's roughly a $5.5 billion North America focused P&C and specialty insurance part of the overall AXA group. AXA group is considered the largest P&C carrier around the world, and with operations in a variety of places and in focus areas. That also means we focus on innovation through a variety of lenses around the world, but my comments today will be more focused on what we're doing in North America insurance. I've been in my current role for roughly 5 months. Prior to that, I was the operations leader, the COO of AXA XL's North America construction business, focused on large construction risk and strategies to connect closer with customers. The way that we think about innovation is customer first. It isn't necessarily internally focused. We truly think of our customer first and what problems they're trying to solve. We have a initiative at AXA Group that is publicly displayed in a variety of ways called Pair to Partner, truly working with our insureds and prospective customers on thinking of us a little bit differently in terms of being a true partner to their business versus just a provider of an insurance policy and a payer of claims. Our approach to innovative efforts has truly been, as I said, customer focused, meeting with customers and identifying key areas of opportunity with them for them to help improve their businesses. Sometimes that dips in and out of the insurance value chain of sorts, but has indirect impact on us as their carrier. We've been on a technological journey for a very long time. We have a very simple strategy. We like to pilot for 90 days various technologies with insurers that we collectively feel with them can make a significant difference to their bottom line and ours, or provide them information or us information to make decisions more efficiently, effectively, or more safely. We've done a variety of these pilots, and I'd like to share a couple of them with you that we've done specifically in the construction space. I find them to be very interesting and innovative. One of the other key things, and I've written an article about it, is sometimes innovation can be expensive, but there are a lot of opportunities in the insurtech space to partner with some of these companies, and there are cost-effective technologies that can be meaningful. I think sometimes a lot of us think when we hear technology and innovation that it's going to be a long journey and very expensive, but it doesn't have to be. So our 90-day pilot approach is good because ultimately we're holding a kickoff meeting. We're partnering with a customer and in a technology and hitting key milestones over the course of the 90 days. Why 90 days? Well, it's long enough to get, for us, many times a good baseline and understand the pluses and minuses of that particular innovation or technology. And also, we feel very strongly there should be some kind of endpoint. I think everybody's been on a project or initiative that never ends, and all of a sudden goes from being a project to a way of life, and we want to test quickly, assess quickly, and move on from there. The one example I'd like to give is a company called Onsite IQ. We piloted Onsite IQ's technology with two different customers at this point in 90-day pilots. And what Onsite IQ does is provides 360-degree images of a construction site. So effectively, somebody walks around with a 360-degree camera. That information gets uploaded to their website, and you can look walk by walk. You can stand in the same place and click the button and see how that room or space changed over time, as well as they provide observations of things that they're seeing. They're beginning to develop their AI capabilities, which is fascinating to work with them on. But for starters, just even having that visual is important. Our customers have been curious about this technology because it allows them to get a unique view, and we're also interested because if this technology continues to move in the right direction, it will allow us to be in more places than what we can be in person. We have a team of risk engineers who are regularly spending time partnering with our customers, and this allows them to visually see more construction sites than what they'd be able to see on their own, just given the fact that not every site is down the street from one another, and it's not always that simple to get to. What I think is one of the most fascinating things, and our customers agree, is that we've been able to work with Onsite IQ, and we've seen their products develop over the last several months in terms of feedback that we're giving. We've seen them improve. We've seen them change. And that's part of the fun part of the journey of innovation is partnering with the different companies and seeing them grow based upon the feedback that you're giving it, and seeing, how your customer can use it and how we can use it effectively. Of course, there's data collected that very well could be interesting to an insurance actuary at some point when there's enough of it. But right now, we're very much focused on the customer's needs and on the safety aspect of innovation. Another company that I'll highlight quickly is Athenium Analytics. We've done a series of pilots and rollouts with them around weather-related risk. So effectively, they have some very sophisticated tools. The company was started and initially funded by the CIA's investment feeder fund. And what they do is they help construction contractors plan out the various phases of construction with some very detailed weather data. So they're using this weather data to determine when is a good opportunity to pour a foundation, when is a good opportunity to close in the building. All of these different things that the construction company is doing has direct implications on their insurance and risk management practices. Additionally, it provides very detailed weather alerts, including wind speed at different altitudes. So if you've read about any of the crane losses that you've seen on TV that have significant impact, both from a safety and a financial and people's lives and injury perspective, this is a technology that helps with wind speed at different altitudes, as well as providing a very detailed look post-event of what specifically occurred at that latitude and longitude, including hail size, including precipitation, ground saturation, lightning, etc. So we try to find interesting technologies that benefit us and our customer, but again, customer first, and where it gets interesting is working with them and finding ways forward. That I believe that our role as a traditional insurer changes every day because of technology. InsurTech is obviously exploding, and we're taking the opportunity to partner and work with as many technologies and customers as we can to help move the ball forward in terms of providing them what they need to be a more successful business and us be a better partner.
Justin, thank you so much, and I apologize for skipping your bio at the start of that. I completely missed that, but look, I think that was a really interesting kind of take on where AXA are investing time and effort around partnering with insurtechs. And I think listening, people listening to the call will be encouraged to hear that your approach is very customer centric and very customer focused, because obviously it's the customer at the end of the day who we're all trying to create this better experience for. So thank you. Moving on to our next speaker, we have Rick McCathron, who is the Chief Insurance Officer with Hippo. And Rick, I do have your bio, which I will read out. So Rick brings nearly 30 years of P&C experience to his role as Hippo's Chief Insurance Officer. Rick is a chartered property and casualty underwriter and a certified insurance counselor, and has held senior executive positions at well-respected insurance companies, including First Connect Insurance as its president and CEO, Superior Access Insurance as its president and CEO, and Mercury Insurance Group as its regional vice president. Rick's passion is in modernizing the insurance industry, which I think we all agree Hippo are doing a great job at. So Rick, over to you.
Well, thank you so much, Chris. I appreciate the introduction, and really excited to chat with all of you today. I think I'm going to focus most of my thoughts on trends that we are seeing within the InsurTech community, both from an investment side and from a company side. I think many of you know that Hippo raised an investment round a few months back, which secured our unicorn valuation. But more importantly, in that we had the opportunity to speak with a considerable amount of investors and what is sort of becoming the trend and things that they are looking at as it relates to investments into insurtech. What we're seeing and what the investors have expressed to us is that there is a clear delineation being created on sort of winners and losers within the insurtech community. We see companies that are gaining significant traction and others that are really struggling to get the traction that, although their technology might motivate interest, it doesn't quite get them over the hump as it relates to securing fundraising and investment. What we've been told is that's really driven by a couple different things. First, there are more incumbent insurance carriers starting their own innovation labs and trying to figure out a way to contribute within insurtech for their own businesses. Related to that, we are starting to see more incumbent insurance carriers acquiring insurtech companies to bolster their efforts in modernizing the insurance space through the use of technology. And we expect that trend likely to continue in 2020 and may get more aggressive, which will ultimately result in fewer and fewer availabilities for other incumbents to acquire the technology that maybe they have struggled with historically to develop on their own. A lot of this has to do with the idea that now that insurtech is a few years old, there appears to be much more emphasis on really balancing the insurance component with the technology component. Many insurtech started as a slick user interface to make the experience for the consumer much easier, simpler, reduce friction, which is great, and the consumers absolutely welcome and have put their buying dollars with insurtechs that have really streamlined the acquisition process through the use of data. We're seeing that insurance has traditionally been big numbers, and it's really shifting to detailed data from various data sources, both traditional and non-traditional. But what's happening now is that as these companies grow and develop, it's becoming very, very important for them to manage the economics of their business. Having an insurtech product that results in a combined loss ratio much higher than the industry standard is starting to actually negatively impact those organizations and their ability to grow scale, create strategic partnerships with reinsurers and carriers, because the rubber is now beginning to hit the road in that these companies really do need to demonstrate that their technology is not only improving the user experience and user interface, but also the bottom line of the core product. Whether your product is a consumer product like Hippo selling homeowners insurance, or you have an innovation that is helping insurance companies reduce either their claims expense or underwriting expense, preferably doing so that will also reduce friction within the customer's mindset. But it is important. Customer acquisition cost in the direct-to-consumer business continues to go up. So many insurtechs are looking for alternative distribution strategies. In addition to that, the increased cost of customer acquisition is simultaneously being hit by less favorable underwriting results. So I think 2020 is the year that insurtechs that have gained traction really need to demonstrate a profitable underwriting result and really find that blend of insurance and technology. Because at the end of the day, no matter how slick the technology is and no matter how slick the user interface is, unless it impacts the bottom line results of the organization, it's not a sustainable business, nor is it a sustainable business model. So to talk specifically about a few things that Hippo is focusing on for 2020 is, in our business, we believe homeowners insurance, which is what we focus on, is a backstop. We think homeowners insurance is there in the event that somebody has an event and you need to indemnify them or protect them or make them whole from that event. But our focus really is driven much more around home protection. We recently acquired a company called Shelter that does proactive home health checkups and home maintenance in order to reduce the underwriting exposure within a customer's house while adding value to that customer by providing proactive services and a slick technology to allow them to maintain their home, thus ultimately reducing the loss experience, which is something that I think is paramount for insurtechs to prove themselves. To us, from our perspective, if the best claims experience, frankly, is avoiding the claim entirely. So what you can do to avoid the claim through a proactive component as opposed to a reactive component dramatically changes the entire value proposition to the customer and to the investors or to the company. So if you notice that a hot water heater is ending useful life and that hot water heater is in your attic, it's a lot cheaper to replace that hot water heater at your schedule and your time frame, as opposed to waiting for that hot water heater to rupture, the water come through the attic into the house and create a significant claim that includes a high deductible and then, of course, losses for the insurance company. So we think continued dynamics around IoT devices is very, very important for the reduction of claims and the protection of individuals' homes. One other thing, and the last thing I will leave in my remarks, is that we are also seeing a bit of pushback from the consumer related to the use of technology. And that pushback that we are seeing specifically relates to claims, where in our experience, and we now have a considerable book of business and several 100,000 customers, what we are seeing is that customers, although they appreciate the technology, they still want a bit of a human touch. When somebody's house burned down, the experience of talking to a claim bot and a chat bot is not necessarily a desirable experience. What we are finding is blending that technology in on the back end to support the human interaction is a much favorable approach when you're talking about such a catastrophic event for that person and their family. So just to summarize, we think that there are significant trends that are developing that will require insurtechs to get a bit more discipline around profitability for their partners or their own organizations, a true blend of insurance and technology. Let's not forget that insurtech is made up of two words, insurance and technology, and focus on both equally. And then ultimately create and use that blend to best serve the customer while simultaneously reducing the underwriting result through the use of data sources, IoT devices, and a proactive perspective as opposed to a reactive one. So those are my comments. Look forward to your questions.
Rick, thank you so much. And I think your final comments about the human components is obviously something that's key across the value chain. And I've referred in the past to the emotional experience of insurance, and it's almost, you think about UX for the user experience, CX for customer experience, EX really for the emotional experience, and really how and where do you leverage automated technology to where it makes sense. And I completely concur that where there's a greater need for a good emotional experience, automated tech like chatbots may not be a great fit, and you're looking more for that kind of human / technology combination. So thank you very much for your comments. Rick. We moving on to our final speaker. We have Anthony Mitchell, who I mentioned is the Director of Digital Agency Consulting at State Auto Insurance. Anthony is a 20-plus year veteran of the insurance industry, holding underwriting and insurance fraud investigation positions before embarking on a 14-plus year agency career. He joined State Auto Insurance companies to focus on digital improvements in the independent agency channel. He now serves as the Director for Agency Modernization Consulting, where that work is concentrated on educating and consulting with independent agents coast to coast about how technology tools and techniques can improve their marketing, productivity, and operational excellence. Anthony, thank you so much for joining us, and we look forward to hearing your comments.
Thank you so much for the introduction and the opportunity to join the discussion today. Personally, it excites me to hear Justin and Rick's insights and the actions that are taken by their companies. I believe that we can collectively agree that it will probably take a village to move the entirety of our industry forward. So I'm personally a fan of any and all working in this space. So I appreciate the opportunity to be with them today as well. From State Auto's perspective, just briefly, I can echo some of the things that have been said. We joined the carrier world in focusing efforts to lower expense ratio via these automated solutions. One thing that we're working on, we have robotic process automation being an example of where we're investing $1 and it's returning multiples of productivity gain. We have bots in place now to help reallocate our human capital to other tasks. We want people doing the things that people need to do and leverage technology accordingly. But the area that I focus on, and it's an area that sometimes is lost in the conversation, is the agency channel. So for State Auto and many others, the independent insurance agencies are an integral part of success. So given the complexities of certain risks, commercial lines, I'm looking at you, we believe that agent advisors will still be needed in some capacity in the years to come. So being that the financial viability of this area of our industry is important and necessary, we are invested in how efficiently those channels run as well. So like the rest of the industry, the agents are being asked to do more or less. So I believe that the collaboration between agent and carrier, plus some of those things that the agency can do on their own, on the agency level, using automated solutions, will be further defined and expanded in the coming years. So touching on two of those areas, first looking at carrier collaboration, what we're seeing is that open API integration with carriers is a great first step in that direction. We've seen that. I'm sure we've all seen that to some extent, and it's a great first step forward, like with quoting and other things like that. But looking into the future, if we sort of do the crystal ball, what will happen in the weeks and months and years to come? I presume that I would say that if we presume that legislative security and privacy issues are appropriately managed, the brightest agents and perhaps agile carriers will further develop and scale out new production opportunities with industry partners and referral sources. So, for example, you may see further development of real-time home insurance quotes for those applying for a home loan. Again, taking into account that legislative security and privacy issues are managed appropriately, and take that on to the automobile industry as well. We see that developing, but specific to the agency level, which is what I see more often than anything, I think that agencies who stay viable will expand their use of agency management system or CRM driven processes to help with what I call the big three cornerstones of agencies. We're talking prospecting new sales, improving conversion rates, and increasing retention. So think about that in terms of a real case scenario being a combination of focuses in a chain of events that happen day to day inside of an agency. For example, renewing customers are automatically sent line of business surveys, as well as options to round out their accounts directly after the renewal. Customers who have continued coverage are identified, surveyed on such things as agency expertise, responsiveness, willingness to refer others. We're talking about a nod to overall satisfaction, customer satisfaction, if you will. And then those responding favorably are then automatically prompted and encouraged to leave reviews for the agency, which supports increased local visibility and conversion rates with incoming referral sources and organic online prospects. So in the end, I think it's been echoed by my colleagues on the panel here. Many of the automated processes are and will be customer-driven experiences to some extent. If the customer appreciates and responds to these approaches, then despite the cost and complexity of some of these build-outs and implementing these things, measurable and scalable offerings make automated solutions quite attractive for all involved, especially the agent. And so in my day-to-day life, seeing how these theoretical things have actually taken place, I'll give you 2 or 3 quick examples of how some of the agents are actually using automations now to help them with prospecting, retention, and overall efficiency. I have one agency that I work with that is using, we'll call them customer service centric automations specific to email. They are reducing the number of emails typed out for such things as policy changes, renewals, questionnaires, etc. But we're talking beyond the typical email template. These are complete automations that include automated diaries, follow-ups, etc. And one agent that I work with in this area estimates that this has reduced the time that his support team spends on these tasks by 70%. So that's freeing up, in his words, the professionals to do professional work. So that's, concentrating on relationship building and expertise-based activities. Another example, probably the low-hanging fruit for many agents, has been automating lead generation workflows. This path from a form fill to complete lead conversion has been on the minds of a lot of the forward-thinking agents for some time now, and I think that it's now coming into focus for the agent masses, if you will. I've heard from numerous agents that one of their biggest issues, a challenge to them, is losing the prospect because of poor communication, inconsistent communication, and a conversion process that is mismanaged. So implementing tools such as automatic replies upon form fill, I know that sounds really, really basic, but sometimes we have access to these ideas, but we don't implement them. So implementation, I think, will be certainly an important part of this. But taking those automatic replies on through setting realistic expectations about what the process will look like with that particular agent, using email drip campaigns to maintain a relationship with non-converted leads. It's basically trying to do the most you can with what you have. All of that under the umbrella of what we have is information and statistics. So with all the effort to attract interest, many or any of this automation helping lead conversion is desperately needed and warmly welcomed by the agency channel. And I would estimate that successful deployment of automation in this area to impact conversion anywhere from probably 10 to 30%, depending on the agency. So, as far as the future looking ahead, I see improvements and automated cross-selling opportunities, but in a non-generic way, maybe meaning that the customer's not feeling bombarded with a boilerplate request to buy something. So for insurance transactions that lend itself to having agents involved, the human element, as has been mentioned before, is a huge selling point and must be presented, but done so in the most streamlined way possible. So that could be presenting marketing and information to clients identified as needing account rounding as it is seen directly from the agent themselves. Presently, agency and customer management systems do not seem to consistently play nice with each other in providing easy automated paths for those cross-sell opportunities. And I see that changing in the next couple of years. And I think we'll get to the point also where AI is determining what should be cross-sold to whom, prioritizing these opportunities based on algorithms such as projected conversion rate based on the carriers that the agent has access to, things like that, and ultimately delivering that information in a format that's easy for the agent to act upon. So it's going to be I think, a bright future across the board for all of us, for sure.
Thank you, Anthony, for your comments. And look, I do spend quite a lot of time in the digital transformation arena, and particularly around intelligent automation and RPA and whatnot. And look, I think there's so much low-hanging fruit from a customer experience point of view, where we can leverage technology, not necessarily to boil the ocean and fix everything in one go, but I think to deliver even small incremental improvements, which still have quite a large impact around the agent experience and the customer experience. So look, thank you so much for sharing your thoughts. I do want to remind people who are on the call that you can add that you can ask your questions. So please keep those coming to us. These guys have a lot of terrific experience and insight to provide. So I do urge you to take this opportunity to ask them some questions. The first question that we have, this is to Justin and Anthony. How are you managing the risk associated with InsurTech Technologies versus partnering with a strong, well-established technology partner that would lower the risk implications to your customers? Justin, if you would like to have a first shot at that.
Yeah, sure. Thanks. That's a very good question. In fact, it's one that came up in a meeting yesterday. Is where do you draw the line between working with what would be considered a more mature company versus, say, a startup? As we think about risk in a variety of ways. We think about risk in terms of making sure that from an internal perspective, anybody that we work with, mature or a startup, is meeting our IT security and compliance standards, and any data collected is very carefully looked over by our legal, data privacy and compliance folks. And it's really important to do, because you want to make sure that you're not putting yourselves or your customers at any sort of risk. And I think that's a very wide term. We also, so with that, sure, you work with a more mature company, sometimes that's easier. I think it's very fascinating, and it's fascinating for our customers to work with some of these startups, even if it requires some additional data hurdle challenges, because you're able to really help them find a way to provide you a product or a service that can potentially really meet your needs. And I think some of the strongest innovation out there can come from some of these smaller startups and companies. So you have to manage the risk as well as, and some of you might be thinking, well, what about the data? What about the data collected? And could that be potentially harmful to an insurance company or to an insured? For example, with the video application I mentioned, effectively we have video of a particular construction site over a long period of time. Could that be used in future litigation if something was wrong? It could. So it's a regular question you have to ask yourself: is the technology that you're working on with your customer going to provide more benefit than it will hurt? To be very frank. It's something you gotta, it's a fair question to ask, but it's a very small risk in my mind, personally, willing to take in terms of finding ways to do things better and finding ways to help our customers. I hope that answers your question.
Thank you. And Anthony, any additional comments you would like to add there?
I agree with everything that Justin said. The biggest challenge is always to weigh out what the opportunity versus cost is, and the cost may be, reputation. And So the vetting process through legal and IT is first and foremost. But then, one thing to take into consideration is when you talk startup in this space, we're talking about people working on a myriad of different solutions. And so something may not be as quote unquote risky as far as the customer experience is concerned when we are the customer. Maybe somebody is coming with an underwriting solution that we're able to implement. They pass the muster as it relates to IT and legal, and now we're using something that's helping the underwriters size up a risk versus something that's directly integrated into the customer experience, such as self-imposed inspections and things like that. So I think it is a great question. Again, agree with Justin on how to approach it, but just want to remind everyone that the question is so big that it could vary depending on what the proposed solution is.
Thank you. Thanks, gents. I have a question of my own that I'm going to merge with another question that we got from the audience, Barry Seaman. Justin, you mentioned earlier, your strategies around partnering with insurtechs. How do you when you think about a company, a company's DNA and their ability to even know and identify which insurtech to partner with, how much legwork goes into that initial workflow, partnership workflow, and kind of understanding your own company's gaps and perhaps objectives going forwards? I mean, how do you create that initial kind of capability to identify insurtechs? And are there any areas within your companies where insurtech has not made substantial inroads, and where would you like to see development there?
Yes, that's another good question. So first off, we've addressed the determination of it in two ways. One is by having regular dialogue with our customers around what problems they're having and they're trying to solve. We find that to be much more interesting than just talking about the weather or calling them about their renewal. To be frank, and honestly, getting from their perspective what's really keeping them up at night, and which of these technologies could potentially help them. The other way we've looked at it is purely by looking at our claim data and seeing what our loss drivers are below deductibles, to see really what's hitting our customers, and then above what's hitting us. And so it sounds very simplistic, and it really is meant to be, but a lot of it comes through dialogue. Our customers are challenged just like all of us. We're constantly getting emails and voicemails and LinkedIn messages from different startups looking to partner with us. And our customers need and ask for direction around who to partner with. And that's really how we started on our journey. I've got a very good mate in our global digital IT team named Doug Alexander. Doug and I partner on this, and we've effectively done a series of workshops of what's the best and practical approach to working with insurtechs, and we've started to build out a mechanism to vet them more effectively, record who we've talked to, record what they really do, and begin to arm our underwriters and risk engineers with information around what are the relevant companies out there, what are they providing, what problem are they trying to solve. So we actually group the different technologies around different problems versus I think we could sort it by a wide variety of other ways, but our customers are challenged with figuring out who to work with, and we feel that it's an opportunity for us to help them with that by putting together that mechanism and truly building out more of a tech library in terms of which ones we've either tested and feel can be a successful solution. And we also talk to our customers and find out which ones they've tested and share that with others as well.
Cool. Great. Thank you for that. And just to expand on that quickly, where do you see, and Anthony, Anthony and Rick, please do chime in here as well. But where do you see perhaps gaps still existing in the insurtech space, and where in 2020, 2021 do you see perhaps companies emerging who are going to start filling some of those gaps?
Yeah, so one of the biggest gaps is the fact that you've got a lot of insurtechs that do great things, but they're not all integrated, and it's difficult for customers to work with a variety of them when it's all separate contracts and all separate solutions and all separate data sets. So bringing that together as quickly as possible, and I think that it will be a journey. It's not going to be something that's solved tomorrow. Is key. I think that there's so much more that could be done just at a basic level around auto. I think we're just starting to scratch the surface on telematic and other applications in commercial auto. It's needed. Everybody, the industry, is at a point where they're seeing auto losses and large verdicts. And then the other piece to me is the continuation of artificial intelligence, and some artificial intelligence, I would say today, is artificial. It's not real. So getting past that and truly seeing some of that take effect is going to be a very exciting thing going forward.
Fantastic.
Yeah, if I was going to jump in and add something to that, I think what I've seen is a failure of insurtechs to partner with each other to create synergies that might provide whatever incumbent, whoever they're working with, a more holistic approach and offering. At Hippo, we partner with a lot of different folks. Some could be perceived as competitors, but where we can create a synergistic relationship, we do so. I think the trend needs to be understanding that it takes a lot of time for an incumbent who you might be partnering with to develop the internal head wrapping around the opportunity, and trying to do that 2 or 3 times with 2 or 3 different partners is very, very challenging. But if you go with a more holistic approach of one integration that solves or serves 2 or 3 different objectives, I think you're going to find more acceptance with the incumbents, and certainly a much quicker speed to market. There are incumbents that we are now just launching with as filling a gap in products that they may offer, whether it's a geographical gap or an underwriting gap. And some of these conversations have taken, a year to do. So I think where you can create a real win for the partner, and I do think some of the flaw that we make with an insurtech is I think we focus a bit too much on things that might be important to us and not things that are important to who we're trying to partner with. I think understanding what their goals and objectives is and figuring out a solution for that specifically makes a huge difference. We use a tremendous amount of data sources at Hippo, and there was one particular vendor that we're still under an NDA with, so I won't share who it is, but didn't come to us with a solution. They came to us asking what our problems, challenges, and where there may be holes in some of our data. They went back and came back with a solution. They listened and came back with a solution that we were able to integrate in our data set. So that's my thought on that anyway.
Thanks. Thank you, Rick. And it sounds like it's and I think we've heard this a lot throughout 2019, where partnerships with insurtechs, it's becoming a much more collaborative exercise as opposed to kind of plugging one solution into another. It's kind of I think that's really interesting. Anthony, was there anything you wanted to add there?
I agree completely. I think keeping in mind one thing that the listener should think about is in terms of that collaboration process involving whomever the customer is. So if this is a customer, like a policy holder solution, then having the ability to gain insight and include them in the process is important. If this is something that's helping the carrier, of course, having carrier representation, that may be a little bit easier, but of course, you know, where my heart is with the agents, understanding that time is that's part of what we're working to solve, are time issues and all of this, make things more efficient. But understanding that these solutions, if you stack them all together and they are working siloed or independently of one another, you may have just traded time here for time there. You're still having to flip a lot of switches and a lot of levers that, with proper integration, as the other fellows mentioned, could provide a better experience overall and be truly efficient the way it was intended to begin with.
Agreed. Anthony, a question for you here from Prakash. So, you know, when thinking about customer acquisition and retention, how is State Auto utilizing sales, marketing, and agency management systems to help agents close deals faster? And again, I think that could be extended to not just closing deals faster, but also improving retention as well.
So for us, basically, it's providing resources and advice to the agency channel. We're dedicated to the independent agency channel. And so a lot of this turns into case study and use case on an individual basis, or as groups of agents that we're piloting things with. And again, you know, I can't stress enough, you know, we on the carrier level have a great number of resources to help lead innovation, but the practical application of that, the pragmatic component, sometimes goes by the wayside. And so we really feel like what we're doing in trying to roll our sleeves up and work with the agents themselves is, and it's been mentioned before, you know, kind of learn what is working, share that with the agency channel to the best of our abilities. And so it's more, I hate to say it because it implies something opposite of what we're talking about as far as efficiency, but it is a grassroots effort right now, at least for us, and we see that, you know, expanding as time moves on with other carriers, other people in the marketplace to help with that. But as far as and I touched on that earlier, we're seeing agents with a variety of whether it's agency management systems or CRM tools, just putting together their own solutions as far as, will this save me a few minutes here or a few minutes there to make the overall process easier on them? Again, all of this is predicated on the customer, the policyholder, the prospect having all of their needs met. So what's happening behind the scenes is effort on the agent part to go, okay, well, this was worth the time and effort to do this. We're actually going to do something with the data that we collect. If that is not a conversion, what do we do with it tomorrow? What do we do with it next week? What do we do with it next month? And so I hate to say that, you know, a lot of these things are individually focused, but that's our experience as it is right now. I think that will certainly change as time marches on, but right now we're having to kind of build that building one brick at a time with the agencies that we're working with.
Excellent, thank you.
Chris,
Go ahead.
Hey, Chris. Hey, this is Rick McCathron. I'm really passionate about what was just said, and this may seem odd coming from Hippo, but I'd like to echo that sentiment. Don't try to disrupt the agents. Try to embrace the agents, because let's not forget that although business is starting to shift, the pendulum is shifting a bit more towards direct to consumer. The vast majority of insurance products are still purchased through either independent agents, captive agents, or alike. So I think embracing the agents as opposed to alienating the agents will pay dividends for all involved.
I think you're bang on, and yeah, Rick, I know people listening will find that really interesting, because you know, we talk about insurance being an emotional journey for the majority of people, whether that's life, health, P&C, and you know, making sure that people have the right care, the right products, the right attention when it comes to the claims a portion of that journey. I think it's absolutely critical to kind of maintain that human component. So we have a few minutes left. I did want to ask you all quickly. This is quite an interesting one from Jonathan. To everybody here, what are your thoughts on having a venture fund and using that to source innovative insurtech prospects?
Well, at AXA, we already spread out across AXA Group. We do in a few different spots have investment funds that are focused on, in some cases, innovations that can help us and our customers, and we have investment fund that's really focused on it from a pure investment standpoint. At a micro level, I would say it's good to try different technologies before investing to see, what may work and what might not. The benefit to our customers of not just saying this is a technology we own in this investment vehicle is that we're able to pivot as technology changes. But I think you can, my opinion, you can go either way, and we do.
Thank you, Justin. Anthony, any thoughts?
I'll say from State Auto's perspective, on a much smaller scale, I'm sure, than AXA, we have a division called State Auto Labs. It's a small and mighty bunch that look to bring together the investment and startup opportunities together and sort of, we invest ourselves. We have a division of our company that will invest into that. But again, you have to be very careful. I think as Justin was alluding to, you have to be very careful about understanding what it is that you're putting your money into. I hope I'm interpreting that properly. So to vet that out, but also be part of the process can be a challenge. But if you're not participant in any way, it's kind of hard to figure out exactly with such a dynamic area of our business where it's actually going. You can only read so many articles. If you're not in the arena and helping out, then it's kind of difficult. You don't want to be reactionary. You want to be proactive if you can, to whatever extent that you can.
Agreed. Gentlemen, I do think we're very close to being out of time. We have a few minutes left, so I want to thank all of you for your comments and participation this morning. I think this has been, in my opinion, one of the most fascinating webinars that I've done this year. And in 45 minutes, I think we covered an absolute ton of material. So thank you to you guys for joining. Just some closing thoughts from myself. I mean, I think everything we heard really has echoes much of what we have seen through 2019. But I think as we go through to 2020, really just now, starting to look maybe a little bit closer at some of the initiatives around technology and digital innovation to say, where is it making an impact, and how can we start measuring that impacts more effectively. So again, thank you to all of you. One last quick reminder for people who are still on the webinar. May next year will be the Insurance Nexus innovation events coming up. So please again keep a lookout for material around that. So thanks everybody. Gents, thank you.
Thank you.
Thank you so much.
And happy holidays, everybody. Cheers.
Thanks. Happy holidays.
All right. Goodbye.